We are back with you on the Market Day Report on a Monday edition. Thanks for joining us. I'm Marlon Bowling with you. I want to take a look back at our cash grain terminal markets as reported by USDA early this morning. On the corn terminals all across the country, a fairly wide range of action. I note that Cincinnati went down 10 cents overnight. That would be the biggest mover to the downside. However, we had a few of the terminals actually went higher. The biggest move to the upside would be around the LA region on the West Coast. That market went up 7 cents at 4.47. So a lot of disparity in the bids on the corn this morning. If we jump to the soybeans here on the cash terminal markets, all lower. It looks like the biggest move to the downside would have been at Portland. They went down 17 cents. Cincinnati was down 11 cents compared to Friday. Most of the rest were down 2 to 3 cents from where they were on Friday. So not a big move at most locations, although a couple did go down in double digits this morning. Now let's take a look at our futures trade in Chicago. Let's go to the corn market and we'll get some expert analysis along the way. On the corn market right now, last time we checked, we were up a nickel. We still are roughly about that same area. September up 4 3/4 at 3.27. December new crop corn 4 1/2 higher at 3.37 1/2. In the soybean trade, it's been strong all morning. September up 22 1/2 at 10.21 1/2. November 24 1/2 higher at 10.06 1/4. Let's go to the trading floor in Chicago. Find out what the word is on the floor. Let's check in with Oliver Sloup of II Trader there in Chicago. Oliver, thanks for joining us. Did you see this coming with that kind of action here following the bearish report that we saw Friday?
It's a little surprising, but considering Friday's price action, it's not, a complete shock. And I was on your program Friday talking about it. Something seemed kind of a little fishy. It's almost like the traders are anticipating there's a big more room for disappointment, and they're looking for value, and they're finding value at these lower prices with the chance of there being a disappointment at the final yields and production numbers as we go forward through harvest. And so you're seeing that buying come in. Now the bulls still have a lot of work to do to get some more momentum to the upside and encourage some of these funds to cover their short positions. The first line in the sand that we've got an eye on, 337 3/4 to 340 1/2, is a key Fibonacci number, as well as a 20-day moving average. And we have not closed above the 20-day moving average since, I believe, June 20th. So this is psychologically significant to us. If we can close above this, I think there's some possibility of more momentum towards 350 to 352, which is obviously a psychological number as well as a key retracement level.
Well, there's that old trader's axiom that you bottom on bearish news, and it doesn't get much more bearish than what we had Friday, huh?
Yeah, absolutely, and we're definitely seeing that play out. We need to see some more momentum, though. Funds do control the market as it stands. They do have a short position, so if we get a close above these technicals, I wouldn't be surprised to see those funds start to cover and maybe go back to a net long position like they've had previously.
Oliver, on the wires, I was hearing some rumblings about some rumors that maybe China was in over the weekend to buy another 4 to 6 cargoes of soybeans from the U.S. There's nothing reported overnight from USDA, but that's the rumor mill. What are you hearing on the floor? Anything like that?
I have heard a few rumors such as that, and I think we're going to continue to see, China step in and be buyers until we get a little bit higher price action where the demand might start to dwindle. But at these prices, I think there's good value here, especially because the crop's not really made. There's still a lot of time for things to go wrong, and so you're kind of seeing that premium come into the market. Now, again, the bears remain in control of this market until we get a close above some technical levels. The major psychological levels that we're looking at 1027 to 1029 3/4. That's 50% of this year's trading range, as well as a 100-day moving average. Until we close out above that, I think the bears remain in control.
All right, a quick peek at our wheat market, and then I want to bring you back, and we'll talk about livestock too here, Oliver. On the wheat, we have Chicago September up 3 3/4. The deferreds are weaker, though. Kansas City wheat on September currently trading 1/4 cent lower now at 4.16. Minneapolis on September we're trading 4 1/2 higher at 5.18 1/4. The cotton market was down this morning early, 43 points lower on December at 70.22. We'll pause for a break and come back and talk more with Oliver Sloup about livestock right after this. Back with you here on the Market Day Report. I'm Marlon Bowling with you. We're going to take a look at livestock in a moment. In the meantime, we touched on it this last half hour. I wanted to kind of pull up a couple of outside markets, one being that rice market that we were watching earlier. Had big upward movement this morning. Still do. So we are still currently about 4% higher. September rough rice now 42 cents higher at 10.07 per hundredweight. And November now 38 points higher, 38 cents higher at 10.21 per hundredweight. So big moves there. Quick look at the dollar. Early on this morning, it was down a little bit. Right now, the dollar value is down 160 points at 95.530. And the crude oil market was firming up earlier this morning on the West Texas crude, and it's adding to it right now. We're up $1.09 per barrel at 45.58 per barrel. That's only 3 cents from our high of the day. Well off our low by $1.20 right now. That bears watching as well. All right, let's head back to Oliver Sloup in Chicago. He is with II Trader, and we're talking with him about the current market situation. So what are you hearing on the floor about enthusiasm for the cattle and hog trade today? Hogs seem to be taking off.
Hogs are really taking off, but I'm not jumping up and down just yet. I know we've seen this similar price action last week, where we were near limit last week, and then ended up reversing what I referred to as a slap in the face reversal, and really pushed the market a lot lower towards the contract lows. And now we're just kind of, I think, really seeing the bulls and the bears, fight this one out to try to find some sort of equilibrium here in the near term. Volatility oftentimes invites more volatility. We're seeing that play out. I'd like to see the market get above that 63 level and maybe stabilize. And I think at that point, if we're able to stabilize at that level or above, then you see some of these shorts start to cover their position. There might be some value to the upside. But until we get some stabilization, the volatility is a little too much for me, so I'm going to remain sitting on my hands, but I'll be watching very closely here throughout the week.
Well, we're showing a chart on the October lean hogs right now, and boy, that was a very steep drop that we saw for a long, long time, followed by a very abrupt rally off of that. So it put a sharp bottom on there. If that maintains, if it continues on up out of here, that'll be a very sharp, pointy bottom on that chart on the lean hog trade. All right, let's look back at the lean hog futures here on October. There for a while, we were over $2 higher this morning. On the lean hog trade right now, we're up $1.82 on October at 61.82. So we backed off our high by about 40 cents or so. December up $1.43 at 56.38. On the cattle trade here, Oliver, looking at the live cattle first, we had a cash cattle market that developed last week, and it was kind of timid, steady, maybe $1 higher on a live basis, dress basis, maybe $1 lower. So we're mixed right now in the live cattle market, not going very far anywhere.
Yeah, it's really not, and we haven't done a whole lot over the past week or so. We've built a nice, what seems to be a base here, at least in the very near term, right around the 100-day moving average. That comes in at about 114.72 today. We've traded on the 100-day moving average for, I believe, the past 9 sessions. So the market's kind of taking a breather from the recent run higher. If we're able to get, above the recent highs, we could see a run towards the 200-day moving average, which comes in at 118.21 for that October contract. So that's the next line in the sand for us. If we fail to get out above the recent highs, we might see some additional consolidation here throughout the week.
All right, September feeders down just a nickel now at 147.50. Thanks, Oliver. Appreciate it. Oliver Sloup with II Trader in Chicago. That's the very latest, direct from the trading floor.